Hi guys, welcome to Common Investor. Today I'll be evaluating Reddit and trying to figure out should you buy this company now or are you better investing in the S&P 500. To start off our analysis, we need three simple pieces of information: revenue, number of outstanding shares, and their profit margin. Reddit hasn't been publicly traded for very long. It actually went public this year, so there isn't much data to go off of. As of right now, in our Google search, we can see that so far it has made $800 million. So if you go by quarter, so far, just this quarter, it reported almost 350 million. If you were to combine the last 4 quarters, I think you get about $1 billion. So we're just gonna give a nice cushion and say that's $1 billion in revenue for the last 12 months. Next piece of information we need is a number of outstanding shares. So as of right now, Reddit has about 170 million numbers of outstanding shares. 170 outstanding shares. Last thing we need is their margin of profit. So there is no concrete number. I am seeing upwards of 8%. Some are saying 2%. Some are saying 6%. Some are saying 20%. So because we don't know their margin of profit, we're going to give a nice number and say about 20% because I feel like this company can be profitable, but we don't have actual concrete numbers yet because there's respending all that capex. So we'll just say 20% for now. All right, since we have all the base cases, let's see what is Reddit's revenue expected to be by 2030. So there isn't much information on what their revenue can be by 2030. This is what I mean. It's very hard to evaluate a company like this. Some are saying it could reach upwards of 15 billion. It could. So now we have to use estimation. I will say the closest thing that will come to this will be like something like Twitter maybe, because Twitter used to have these very centralized groups as well. There's nothing on revenue, no prediction, no analyst, no forecast on Reddit. It's just a bunch of people speculating the stock price because we don't know. So Twitter had annual revenue of $5.1 billion in 2021 when Elon Musk took over. So I'm going to say that could be a reasonable estimate. I think it could reach 21 billion. Even though today it's only making about $1 billion, I think it can reach 5 billion in revenue. So let's say that's about a 500% gain. So 500% would be like 100% gain every year. Number of outstanding shares are going to balloon. If you're thinking that's not going to happen, it's going to balloon. Yeah, about 500 million is accurate. I think it will have 500 million number of outstanding shares. Its PE, I feel like, is going to be very rich and high because it's going to be in that speculative area where it's going to be growing massively. So I'll give it a PE of 37. So based on my analysis, right now, it is extremely overvalued. I don't think it can give you a feasible return even at a $600 billion revenue. Now, I know that I said that it's going to double its number of outstanding shares, but guys, it's going to, because it's going to spend a lot of money on capex. It's going to spend a lot of money on growth. It's going to hire a lot of people. So if you think it's going to keep that 175 million shares that it has right now, you're out of your mind. It's going to double in the next 5 years. So based on my analysis, this is actually not a good investment. You're really not going to get any return over the next 5 years based on my analysis on this stock. So for me, I would skip this stock. You're better off investing in the S&P 500. You would get a better return on the S&P 500 than you would do with Reddit. Now, how can Reddit fix something like this? Easily. That's very easy. If it doesn't print any more shares, let's say it prints zero amount of shares, all of a sudden its stock could be worth $379. But guys, it's not going to. It's going to print 2 more times as shares that are outstanding right now. So according to my analysis, I think this is a hard skip. I don't think you should invest in it yet. What if it can 10x its revenue? Then it just barely, if it can get to 11 billion in revenue by 2030, then and only then will it measly beat the S&P 500. This is a no-go for me, guys. I will not invest in this company. This is too much risk with not a lot of reward. So for you to actually match the S&P 500, you would have to buy the stock today at $69. It is overvalued as hell. I would recommend skipping this stock, but you do whatever you want to do. If you like this analysis, you want to grab your own sheet and do your analysis, the link is in my bio. Subscribe to my Patreon to support this channel, like and follow, and continue seeing videos like these on my channel.